The stock market is looking much more bearish last week. Let me explain to you why. We're looking at the S&P 500 ETF SPY, both of the strong indicators. So first one is the accumulation distribution line. People are distributing, pointing downwards. So selling pressure is definitely there. Another one is called the advanced decline line. It tracks the 500's underlying stock inside S&P 500. They're both pointing downwards, so it is looking bearish. Price action is, let's have a quick look on the ES1, so the E-mini. Also, you can see both of the accumulation line and advanced decline line are pointing downward. And this major area 4,240 has broken through, so what I'm looking at, maybe one more day drop and then a slow one, couple of days pullback, then I look to be a seller. That would be what I like to do on that. You can see this is pretty significant because once this trend line break, we're probably looking at testing maybe around the 4,000 area, or could be even a bit lower around the 3,800. The 3,800 is actually the previous low in 2022, so we could be going back to this point, and yeah, could be a good sort of entry point for stock investing, really. But short term, medium term, the next couple of months, I remain bearish now. You know, with daily definitely is on a downtrend. If you go to weekly we have a downtrend. Even on the monthly side of things, we're trying to break this. We're having a 3 months retracement bar, so correction is here. So it's not necessarily a bad thing if you can use it to your advantage. Let's have a quick look at on Nasdaq as well. Nasdaq has broken through a major level, the 14,500 area, so very similar. I like to remain a seller, pull back to around this area, then look for right price action to sell it to around this 13,400 area. Okay, so that's the plan on the US area. You can have a look at other stock indices as well, such as the Dow Jones. It's looking bearish, you know, it's daily downtrend. Dow Jones Transportation is already showing a lot of weakness through there. Russell 2000's breaking major support now, you know, could be heading back down to a major level around the 1,500 area. Hang Seng, the Hong Kong index, has been bearish. You know, we are now trying to find some support around the 16,800 area. If it doesn't, we'll probably be testing around the 15,000, which is the low in 2022. So, you know, he is looking quite bearish in the Chinese market. Other market that I am actually looking at is the Nikkei, so the Japanese index as well. We got a flag. If it's the 30,000 area breaks, then yes, we could have a bigger correction than anticipating, maybe 27,000 area. So overall, if you use the macro market as your guide, we're definitely looking a bit more bearish now. European indices, the CAT is the most bearish actually to my eye. So if we're reaching to a soft level around the 6,800, but happy to be a seller if I can see price pull back to around the 7,000. Good price action, yes, happy to sell it to the swing low and then let some run. Okay, so I remain bearish for the next couple of months on the stock market. Do you agree with my plan? Leave me a comment. Thank you so much for watching.